Good morning, everyone from Los Angeles. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Welcome. What a week, huh? Should we say thank God it's Friday? I think we should. A lot to talk about this today. I'm also going to put out the link if you or some of you want to join the live stream. Markets are tough. I mean, there's no ifs and buts about it. You just gotta weather the storm. Yes, we're having a bounce today. Is it a dead cat bounce? Is it the bottom? A lot of people are going to say, oh, yeah, this was the dip, 10%. It's correction territory. People call it there's technical terms, I guess, for these things. If it's 10%, it's correction. If it's 25%, it's a bear market. All I'm doing is I'm waiting for Kramer to say we're going down. If he says that, that means we're going up, or CNBC starts panicking and does some specials. Market turmoil. We're tanking, whatever. So, all I do is just trade what's given to me by the market. The market is the best pricing mechanism, period. There is no ifs and buts about it. You can't question the market. The market is going to do what it's going to do, and it's going to try to make everybody wrong. And it has done a pretty good job over the last couple, 3 weeks about that. Look, there are reasons for what's happening. I've been talking about this for the past month. I had put my thesis together. I put some videos out. I think I was ahead of the curve on this one. The only thing I did not do correctly is go short the market. I did a little bit, but not to the extent that I should have, to actually make some money on the way down, as I said it many times before, right? Market, some people say market goes up the escalator and goes down the elevator. Or, I learned market walks up the stairs. That's how it is. Definitely takes the express elevator down. And last 3 weeks, if that's not the express elevator down, I don't know what is. But there are reasons for that, which I'm going to talk about in a few topics. Why it's happening, how the macro picture has changed. Is there a push and pull between the Fed and the new administration? See, the only person Trump cannot fire is the Federal Reserve Chairman, Jay Powell. He's appointed by the last president. He's going to run his term. In fact, I asked him. He completely ignored the question. The question is, what is the Fed trying to do, and what is the new administration is trying to do? I mean, the new administration, definitely, clearly, you can tell they have a plan. Now, is the plan executable? Is the plan going to be successful? Is it super risky? Without a question. It's super risky, what they're doing, or what I think they're trying to do, right? Everybody has an opinion. I'm sure you all have your opinions as well. It's not political. It's the country needs to have some changes done. That's a given. It's not a right wing, left wing situation. Things need to change. We can't continue down the path we've been going. Again, this is not about Republicans or Democrats. Deficits have gone up during Republicans faster than Democrats. The general idea of spending the money we don't have needs to end. That is the reason we're at 37 almost now $1 trillion in national debt. And that's going to, at some point, affect it. And now we're seeing it, okay? That 37 trillion debt is like an anchor on a steamboat. We're chugging along, but we're dragging anchor. If you know anything about boats, if you drag anchor, you're going to slow down. Your engine is working over time. It's going to overheat, but it's dragging anchor. What do you have to do? Well, you have to pull that anchor up. And what is that? That's the debt. And as we know, they created Doge under Elon Musk. Is it going to be enough? I'm going to talk about these things today on a few topics, and then I'll go through my position screen. Yes, we're getting a dead cat bounce today. Some people will call it that. Some people will go overboard. Just like they call for a crash. Now they're going to call, oh, it's just the bottom. Look, I don't know. I don't know if it is. I'm being super honest here. I've seen this movie before. I don't think it is. I don't think it's the bottom. I think this is going to be a multi-leg, probably 6 to 8 month kind of a drawdown. The first leg may be over. Yes, we may be getting a bounce today. There's one other thing that I want to talk about is bull markets have a rhythm. Bear markets have a rhythm. Are we in a bear market? I think we are. Now, that may be a big call to make, but luckily, bear markets don't last that long. They last, in the worst case, 16, 18 months, and they're accompanied by a recession. So the deepest bear market we've seen was obviously in the dot-com bubble, drawdown of 75%, but we are nowhere near at that time. So the comparisons to the dot-com bubble are not only unnecessary, they're not factual. Since 2000, in the last 25 years that I've been observing and trading, things have changed quite a bit. The economy has changed, So let's not do that comparison. But the similar comparison to a slowdown and an actual recession was the GFC in 2008 and the great financial crisis. And the drawdown was pretty massive on that one. Again, I don't think we are in that situation. So the best comparison I may have to this is just happened recently, actually. About almost a year exactly drawdown, and about to the tune of 30% on the indexes, but then stocks got decimated. I put out a video yesterday. How's your portfolio doing? Because not everybody owns the indexes. If you own the indexes, yeah, you experienced the 10% drawdown in the SPY and close to 14% drawdown to the low yesterday in the NASDAQ. But what happens to the underlying stocks that you're holding in your portfolio? They got decimated. I mean, I sold cash secured puts on a bunch of stuff that I want to own. If I own it, I'll show you the positions with full transparency, obviously. And and I'll answer the questions and, all that stuff. So, and then I'll put the link up at the end. If some of you want to come on, you're more than welcome to do so. So, yeah. So I'm going to talk a little bit about a few topics. And then, go through the usual routine. So the first thing I want to talk about today, well, first of all, please put a thumbs up at exit. It's free. It helps the YouTube algorithm. Thanks for the support of the channel. I'm about to hit a couple thousand subscribers, 6 months. Not too bad. It's pretty slow, but YouTube is YouTube. Please share if you enjoyed the content. And if you want to become a member, please become a member. Support the channel that way. Members get a few perks. The perks are they get 4 extra live streams a month. They get access to Telegram chat group where I post all my trades live. Again, not trading advice, financial advice. If you want to tag along, you tag along. But I also put the exits out as well. Wins, losses, full transparency. I post my current positions on the community page of the YouTube channel every Monday, Wednesday, and Friday. So you can follow there if you're not a member. And if you're a member, you get this wonderful t-shirt because we all wear it during our members only live streams at $30 value for free. Because I want to, again, I say this to our members all the time. I don't want to give you a fish. I want to teach you how to fish. And I think they're learning quite a bit. And actually, I think they learned quite a bit in this last 3 weeks. More than from me, they learned from the market, how the market could be. Because, what we experienced last 2 years is not normal. Okay, indexes don't go up 25% on average a year, and when the drawdown happens, stocks get decimated, and a lot of things are down 30-40%, including some of the Mag 7s. So we'll see where the market's going to take us. But let's start with the markets, obviously. So red has been the color of choice, not my choice. Seeing things red every single day is depressing. Okay. So the rhythm of the bull markets and bear markets, right? So on a bull market, the rhythm is Monday's strong right off the bat. Tuesday's strong. Wednesday's kind of a little bit of flat. Thursday, Friday, a little bit of a profit taking, but again, strong close on a Friday, and then repeat the action. And so for 2 years, we made nothing but higher highs, higher lows. That's an uptrend. Well, the uptrend has been broken now. So in many different ways, 200-day moving averages, all the things that more people follow. Uptrends are channels that we've been stuck in for a year and a half. Look, all that is gone. Now, that's the technical picture. Obviously, there's a reason for it on the macro side and the fundamental side, which you have to put together and figure out what the market's going to do going forward, because technical analysis shows you what happened in the past. It doesn't tell you anything about what's going to happen in the future. However, enough people follow it that it may affect the moves in the markets. Okay. So the market closed in correction territory. So that is the technical term, I guess. When the SPY goes down 10%, that's correction territory. 16 days, literally, last new all-time high we made 16 days ago, and since February 20th, we rolled over, and it's been fierce. So seeing red day after day, and what has happened is that, so let's go back quickly to the rhythm of a bear market. The rhythm of a bear market is strong down days on Mondays. Go look at the last 3-4 Mondays. Strong down days, extreme amounts of selling. Tuesday, we kind of bottom around 9-10 a.m. A little short covering happens. We kind of try to roll up. Thursday, flat. Friday, we start selling again. That's why I'm not liking today's rally. Because it's happening on a Friday. On bear markets, Friday rallies are not good. Although, in a bear market, the rallies you get in a bear market are a lot more fierce, a lot more rippers than bull markets are. On a bull market, we just go up, we go sideways for a couple of weeks, consolidate, and then take the next leg up. I think what we're going to experience now is, if this is the short-term bottom, we're going to rally back up to resistance and roll over, and then next leg will come on the downside. So I do expect lower lows, lower highs now for a while, as opposed to higher highs, higher lows. So the rhythm has changed, I can tell, right? And the other thing that has happened over the last 15 days in a row, every single rally has been sold into, every single time. So I do watch intraday charts as well as dailies and weeklies, obviously, because sometimes you have to take yourself back from your PC that you watch. And a lot of people day trade, 0 DTs, whatever. I'm not into that. But once you take the look at the bigger picture, it's pretty evident what's going on. And that's when experience helps you. So markets down, 10% on SPY and 14% on the triple Qs or NASDAQ. But what has happened during this time is that $5 trillion worth of wealth got wiped out. That's a lot, obviously. And for long-term investors, I think DCAing works, and which I have 2 different accounts. I have a long-term investment account. I have a short-term trading account. The important thing is to understand if we have changed colors in the marketplace, which I think I have. So I think we're going to see a lot more red Yes, there will be bounces, and these bounces will be fierce. I mean, like today, fierce bounce right off the bat, and it's staying strong. So let's see if they sell into this rally. Most likely not. Most likely it'll go through maybe a few more days, and we have very important thing coming up next Friday, which is quarterly option expiration, which is going to create more volatility. So one thing that I can truly say is last year's last episode of Power Hour, I had a prediction. The prediction was, I can't predict what the market's going to do, but one thing I predicted, and it's definitely has been true so far, is increased volatility. And we had more past 2.5 months. We haven't even finished March yet, the first quarter. We had more volatility than we had all 2023, 2024. So for some people, volatility is their friend. I mean, I like volatility, but even certain things these past 15 days is making me nauseous. So if this is making me uncomfortable, God knows what happens to the average retail investor. So what we need to understand is when the markets turn, there is sentiment as well. I do watch sentiment closely, very closely. And on the right-hand screen, as some of you may see, is so the sentiment has been shifted from bullish to actually almost to extreme bullish levels, but it takes time for that flip to happen. Once the flip happens, it also takes time to work through this drawdown and finally reach a bottom. A lot of damage has been done, okay? This damage, a lot of people are expecting a V bottom like we have experienced last 2 years, right? We snap down and then we just snap right back up, go make all-time highs. I don't think it's going to happen this time. All the dip buyers over the last 15 days have gotten wiped out, right? Because they're so used to buying the every 3, 4, 5% dip. Well, these dips did not hold. So hopefully most of you kept your powder dry and, because cash is a position. A lot of people say cash is trash, and this, that. No, I disagree. Cash is a position, and you need to preserve your capital because there will be a buying opportunity down the road. Is it today? I don't think so, but let the market settle down. Markets open every day. You don't need to rush, into anything. And although if you do have some stocks that you've been eyeing on this pullback, I think you can comfortably maybe sell some cash secure puts. That's what I'm doing in my account. I'll share it in a minute. So, those are the things. And but the macro has changed. Technicals have definitely changed. It needs to repair itself, right? I don't think the V bottom is going to be the shape of bottom we're going to experience on this down leg. I could be wrong, but that's my opinion, and I'm going to trade accordingly. I'm going to trade what I see, and that's what I'm seeing. It is definitely treacherous, right? It's definitely exciting if you're short, especially. I mean, on my 10-minute, 10-day chart, the VWAP, it's just coming down, right? It's just slowly walking it down for 14, 15 days in a row. Every bounce to VWAP, if you bought 0 DTEs or dailies or the next day's puts, you made a ton of money. That's about to break to the upside. We'll see what kind of push we get to the upside, but 15 days is a long time, man. I don't think I've recalled seeing it 15 days in a row. Market just struggling under VWAP because the selling is so strong. So we'll see, so to finish this segment, I think this is that can't bounce. I don't think we have bottomed. Market needs a lot of work to just stabilize first, and then if the next leg comes, a retest of the lows needs to happen. Maybe lower lows on non-confirming technicals. Some bullish divergences need to develop because we did create massive bearish divergences while we were making all-time high after all-time high. None of the technicals were confirming, especially on the weekly side. RSI was not confirming, MACD was not confirming, and they all have turned down now. So it takes time. It's going to take some time. So patience is the key. please follow 3 Ps: patience, position size, and planning. That's the only way you can survive these types of markets. Keep your powder dry, keep some cash on the side, and live for another day, because there's no reason to actively get pushed and pulled with every word President Trump is saying. It's affecting the markets. Every time he opens his mouth, market sells off. And it started a while ago with the tariff situation. So we'll see. We'll see where we go. So the next topic I want to talk about is going to be, we know President Trump put Elon Musk as the head of Doge, right? So one other thing that I see it happening in, part of the macro picture that has changed for me over the last month or so, which I kind of talked about on the channel even before everybody's talking about, is it's pretty clear of what's going on, okay? So as we know, during the first term of President Trump's first term 4 years ago, he would talk nothing, a lot about the market, right? The market's all-time high, market's all-time high. Well, now he's not talking about any of that. They even asked him, and he said, I don't watch the markets. I'm like, well, that's the first time, right? But to sum it up, President Trump believes that short-term pain for long-term gain. I think that's the theme now. And, they're doing it. I mean, they are definitely talking that game, from President Trump to Elon to Scott Bessent, who's the Treasury Secretary. They're all talking about it, right? Well, is it going to work? Is it super risky? Yes. Are they intentionally going to put the economy in a recession? Well, we're going to find out. But the market, Mr. Market, was pricing in a soft landing. And so that's getting definitely priced out, okay? Because soft landings, and I talked about it 2 months ago on the channel, soft landings are not easy to do, and we have maybe less than a handful in our history. Economy is just too big to soft land on hard land. But I think now what the market is doing now is definitely discounting soft landing. That's one. The other thing the market is doing now is pricing in. So my market, for me, is the best pricing mechanism on the planet. There is no better pricing. It could be right, it could be wrong. It could overshoot, it could undershoot. That's not the issue. But the price you see here is the scoreboard that you need to follow. Just like when you go to a basketball game, you're watching the scoreboard, right? Yeah, one team is playing great, the other team is winning the game. Doesn't make any difference. Scoreboard is scoreboard. So you need to be really cognizant of that, as opposed to, creating personal biases and things like that, which will hurt you in many different ways. So, President Trump now believes short-term pain is the only option to lower inflation and refinance $9+ trillion. And I'm going to talk about this on the next segment, is $9+ trillion of U.S. debt that's coming due. About September 18th of last year, Fed started lower interest rates by lowering the Fed funds rate 50 basis points. And I was kind of questioning, why are they doing this if the economy is really strong? Well, now we're finding out, aren't we now, right? Last 2 months, consumer sentiment is in the toilet. Actually, inflation is kind of ticking down a little bit. And President Trump wants lower interest rates and lower inflation. Okay, so how do you achieve lower interest rates? You can't just tell the Fed lower interest rates, because Fed's not listening to Trump. And they're not in the same camp. So Fed goes, well, we're going to watch the data and do accordingly. And the Fed goes, well, no, it's not time to cut the rates aggressively yet, because it may bring inflation back. Well, then, the hat's changed, it reversed. So now President Trump is talking about lowering inflation by potentially, intentionally slowing the economy down, potentially putting us in a recession. So now they're getting the pain out of the way, because look, it's a 4-year term, right? We all know that. They haven't been even in Washington for 100 days yet. And the message is pretty clear to me. They're going to slow the economy down, because 80% of our GDP, of $28.5 trillion GDP, 80% of it is consumer spending. Consumer is stretched as it is, to the point of credit card debt is through the roof. And, defaults are happening already. And we know Fed's target is 2% inflation with full employment. Well, that didn't happen. That's not happening. Inflation is sticking around. So in order to lower the rates, we need to lower inflation. Okay. How do we do that? Well, we put ourselves in a recession. The only way you can lower inflation is slow consumer spending down, because the true definition of inflation is too many dollars chasing too many goods. The other thing you need to do to lower inflation is, cut spending. The other thing you need to do is control the debt, so that, the Fed doesn't have to borrow money because Washington's fiscal policy is broken. So all these things are coming together. The picture is really coming together now. And a lot of people in Washington, in the cabinet, are talking about lower interest rates than higher stock market. Okay, well, how do we lower interest rates? Well, we lower interest rates when we put us in a recession, because then the Fed is going to be forced to pump, right? Then the Fed needs to lower the rates, especially the long-term rates that affect mortgages and car loans and things like that for major purchases. And then, by the end of the 4-year term, because this administration is not only looking to cut spending, but they're also looking on the deregulation side to free up the economy, or some more economic gas, or to increase the GDP that way through deregulation as opposed to regulation. So they have a plan. The plan is pretty clear. They're going to slow the economy down to the point that then they have enough time to put the gas on, and then by the time Trump is finishing his second term, these 4 years, economy is booming, stock markets at all-time highs, and all that good stuff. But I kind of agree with this short-term pain for long-term gain, but I'm watching it closely, and I think for a lot of people, short-term pain is obviously painful. I mean, we see what the market is doing. Market is pricing in a slowdown. I don't think it's pricing a recession. I think when the market prices a recession, market will be down about 30% from its all-time high, and that's my target. My target is on S&P is 5,000. I think we're going to see those levels when it's all said and done. And as we know, market's 6 months ahead. Market's always 6 months ahead of what is happening. And will we overshoot? Probably. We always do, right? But then the important thing is, again and again, keep your cash together. Yes, be nimble. Take some small losses if positions are going against you. Don't put your head in the sand and say, oh, it's going to be okay. It'll come back. I've seen this movie before. It's painful, but you survive, especially if you're watching me, because I will give you some good advice, and not about trading, but about the macro picture, and because these things move slowly. It's like a rolling train. A lot of people have these days no patience. They just expect market to go down, bounce right back up, make all-time highs. It doesn't work like that. It never did until the last 2 years, where everybody became comfortable, or through the pandemic, where everybody was sitting home flipping options on Robinhood. People just became completely too short-term oriented. And to me, yes, you may have a trading account that you do short-term stuff in, but then you're trying to create generational wealth. And then it is true that if you do buy after the market draws down 25-30%, for long term, you will make money. That's what you should have. You should be thinking of investing as opposed to just trading and making the quick bucks. This is not a sprint, it's a marathon, so act accordingly. So next topic I want to talk about today is going to be gold, right? Just hit 3,000. And I also want to talk a little bit about Doge. Elon, I mean, I got to take my hat off to Elon, okay? Not because of what he's doing, if it's going to be successful or not, because I think the debt is so large. They're finding a lot of stuff, obviously. We all heard about the the inefficiencies of the government. I agree with that. I think the government is too large. Inefficient government is a drag again. And if you, in fact, I put this up on the right-hand screenshot on Twitter with 4.7 million followers in less than a month. The Department of Government Efficiency, Doge's website is on. So everything they do, they post there. Every inefficiency they find, every fraud, they discover, they make it public. And in fact, they're asking for the public's help. It says, please DM Insight for reducing waste, fraud, and abuse. I agree. I think a lot of that happens in the government. And, are they going to be able to, find enough stuff to lower the debt? We'll find out. Time will tell. But on Elon's side, he obviously doesn't care about his wealth. We all know that now. I'm not a huge fanboy of his. I think he's a genius. I think he's an amazing human being. But, he has lost $200 billion of wealth, billion with a B, in the last couple of months, right? Now all the people who loved his Teslas are hating the Teslas. They're vandalizing the Teslas, which I think it's absolutely ridiculous. Okay. So, but, are they going to be able to reduce the debt? Well, first we need to stop it from going up. And the biggest part of our debt is the interest cost that we're incurring, right? $1.2 trillion last year. So the interest is going on top of the debt. Well, we're almost at 37 trillion. First, we need to stop it from going up. Then we can think of reduction of the debt. Is it going to happen by him firing 300,000 government workers? I doubt it. There's many, many other things that need to happen. And that changes the macro picture quite a bit. So is Doge going to be able to fix the deficit spending crisis? Time will tell, I'm going to say, but they're on the right track. They are doing the right things. They are looking into some inefficiencies and waste and fraud, and that does exist. Nobody can deny that. You may like Elon, you may like Trump or hate Trump and Elon. The point is, even if you're a Democrat, you must agree that your tax dollars are not being spent well for the last how many decades now. And it's completely out of control. You send it to the IRS, to the Treasury, they blow it. Not only they blow all of it, right? They spend $2 trillion more every year than they should. On what? We don't know. So this is what Doge is good for. At least discover what's happening. The accounting of the government is necessary, right? If you look at the government as a corporation, the government has never been audited. We just send our money to Washington and then they blow it and they put it on fire. I think regardless of what political, aspirations you have or ideas you have, what is happening is a good thing. An audit of the government was necessary and it's painful. Yeah. For some people, I feel for them. They're losing some cushy jobs, but then were you doing your job efficiently? Because in any company, that wouldn't be happening. They get audited every quarter, right? So the important thing is, like, if you look at the chart on the left, the screenshot I put up, this is the blue line with the arrows pointing is the debt. Look, look where we are, right? And it keeps accelerating. And that's what's bringing inflation, by the way. And what happens? Then the Fed prints money because you need to close that budget deficit of $2 trillion a year. They print the money, they put it into circulation to balance the budget, and inflation happened. And now, until that line that's going literally parabolic now, or 45-degree angle, if that was a chart, I would love it. The stock, I would love it, but it's not. It's something that we need to flatten out first, and then we need to start reducing it. And it is necessary what's happening here. So, yes, it's painful. Yes, some people are going to get laid off, and, things need to change. There's a new sheriff in town. You may like the sheriff, you may hate the sheriff, but the laws are the laws. Now, the point all of this, yeah, okay, Trump does some good things. Let's say next 4 years, it turns out to be okay. The risky, um, you know, things that they're doing now by hopefully, maybe it's not true, but I believe it is, that intentionally putting the economy in recession to lower inflation and then bring it back to life. We'll see. We'll see how it's going to work out. But I'm convinced that the government has a lot of waste and fraud in it. I skipped too fast. And first, let's reduce all of this stuff. Okay, let's halt the debt from going up, and then we can work on reducing it. And it's happening now. So I am definitely curious about how much Doge is going to be able to lower the deficit or the debt, because it is so out of control that it's like it's going to take, I don't know how long, but I hope they're successful at it, because then that's going to set up a long-term run for the economy and for the next generation, because I don't think my kids should be shackled with 37 trillion in debt. And you need to think of the future. I mean, we're all on this planet for a limited amount of time to do the best you can, and then you just kind of move on after that. But so time will tell how much Doge is actually going to be able to reduce the debt. And in all of this, let's not forget about something that's going on that I talked about quite a bit. Gold just hit $3,000 right there. Now, if Doge is going to try to reduce the deficit, if inflation is going to come down, and gold being probably the best inflation hedge that exists, why is gold making an all-time high? Well, I know why it's making an all-time high, because a lot of people are abandoning, or a lot of countries around the globe are abandoning the US dollar because of the debt of the 37 trillion in debt and deficits. US dollar is in the toilet. Now you're going to say, Serge, it's very strong against some currencies. Yes, US dollar is very strong against the Turkish lira, let's say, or against some other currencies, against maybe the euro. But the within the country, within our borders, US dollar is in the toilet, right? I mean, what has happened to your buying power over the last, I don't know, 2 decades? Every year you're losing 6 or 7% of your buying power. Now, is your income keeping pace with that? Has your W-2 increased by 6 or 7% per year? No. Adjusted to inflation, incomes are down in this country. So US dollar within our borders is in the toilet, is tank, right? Well, gold is figuring that out. But not only that, what's happening is that a lot of countries are actually buying physical gold. They have figured out, okay, this is trash. Inflation is not going anywhere. Because if the inflation was going down and under control, why is gold at $3,000? Well, it's a hard asset, right? And I talked about this many, many, many times. And look at all the hard assets. Now, one part of the hard asset is correcting now, which is stocks. Bitcoin has corrected quite a bit, from about 110,000-ish, let's say, down to 78, 80,000. That's a 30% correction. Market is down 10, 12%. So some of the hard assets are correcting. But next is going to be, I think, real estate. And last, I think, is going to be gold, because a lot of countries are buying tons of physical gold. There is demand for it, and that's how they're going to fight the debasing of the US dollar. And I said it, go watch the videos that I put out. Gold is a great inflation hedge. Yes, you cannot carry it, but you can invest in gold in many different ways. You don't have to go buy physical gold at Costco. And I heard that Costco physical gold sales are actually going through the roof, right? People are buying gold bars at Costco. Look where we are. And the reason they're doing it is because they want to protect themselves against inflation. They want to protect themselves against debasing of the currency. And that's one way of doing it. Important thing is to see all these things and stay in front of it, right? Is gold at 3,000? You know, people ask me, gold 3,000, isn't it too expensive? Expensive compared to what? Relative to what? Right? It's been going up because there's a reason for it. There's demand for it from other countries, which are actually getting rid of US debt in dollar-denominated assets and then putting the money into gold. Yes, it's a crowded trade. Yes, everybody's in the boat. You know, if the Trump administration is successful in reducing the debt, if the Trump administration puts the economy in an intentional recession, these are all ifs. If the interest rates start coming down, if inflation is under control, is gold 3,000 justified? No, but it's not for me to say. At the moment, the market is deciding. Again, scoreboard. Argue with the scoreboard, you're just going to get a fall flat on your face. Don't argue with the scoreboard. What you see in front of you may be right, may be wrong, but that is the current price of a transaction happening. There's somebody willing to buy at that price, and there's somebody willing to sell at that price. And to me, long term, Bitcoin is also going to benefit from all of this. The picture I'm seeing in this is that if we do go in a recession, market's obviously going to sell off, but then rates are going to come down. If rates come down, gold does well under low interest rate environments, and then the money printers are going to start, and that's going to create again inflation. And I'm looking much longer picture now. I'm not looking like 6 months, you know, a year down the road. But that's why gold is going up. That when the printers start again, right? Because we're in a recession, what is the Fed going to do? Start the printers again. That's when Bitcoin is going to, I think, take the next leg up. It's frustrating everybody now, and gold is going to take the next leg up as well. So we're in this cycle, and who's to say after 4 years, who knows who's going to win, right? All this work that's being done by Doge, by, you know, cutting the inefficiency, cutting the waste, cutting the fraud, the next administration may completely, just like Trump did in the first week, he signed over 200 executive orders wiping out what Biden did. Who's to say? So, but again, you know, watch the scoreboard. The scoreboard is, you know, tells you the truth to the moment. So one of the reasons that I believe that all of this is happening and is this. The Trump administration has clearly said they're not paying attention to asset prices at the moment. What they want to do is they want to lower interest rates. How do you lower interest rates? Why do you want to lower interest rates? Who's going to benefit the most from lower interest rates? The consumer definitely will benefit from lower interest rates. The consumer needs lower interest rates for the credit card interest rates to go down, for the mortgage interest rates to go down, because housing is in the toilet in the country. It's not, because we're at 7% mortgages, 30-year fixed. During, you know, 15 years of ZIRP, we were at 3.5 mortgages. That, you know, people cannot afford homes as it is. But that's the other correction I think is going to happen here. Home prices, I think, are going to come down, which is going to make it more affordable. And then if interest rates come down, you know, I did few videos in the past 6 months about this. Who needs lower interest rates the most? The consumer definitely will benefit from it. Although, as we know, banks raise interest rates fast and lower interest rates very slowly. But if we do go into a recession, the cure for a recession is lower interest rates. Fed will accelerate cutting rates. Okay, so consumer is going to benefit from that. Great. But the most important entity that's going to benefit from it is the US government. Because I said this non-ending for 6 months. That was the reason I actually started the channel, is that the 37 trillion in debt now, right? This is paper it's like an IOU. We put this out there. People own this debt. Who are these people? Who's holding the bag? Foreign wealth funds, you know, other governments. Although China is reducing it, Japan is reducing their US Treasury holdings. Pension plans in the US, hedge funds, all, you know, all this debt is owned by somebody. And just like you going to a bank taking out a loan, this is a loan. This is an IOU given to other people. Well, there is something called a coupon on it, meaning interest. When you borrow money, you pay interest. Well, US government debt is no different. They borrow the money, they have to pay interest. When we had 15 years of zero interest rates, okay, the interest cost on all our debt was minimal, few hundred billion a year. If few hundred billion a year is minimal, well, as of last year, the interest cost on our debt is up to $1.2 trillion. It's 1.5 times our defense spending. It's almost one-to-one with Social Security spending. So that's another drag in the economy. That's another anchor. Can't we use that 1.2 trillion that we're just putting on fire, paying some people because they're holding a piece of paper that's called the U.S. government treasury bond or note or a bill, like Warren Buffett is holding 340 billion in treasury bills at 4.5%, 4%, right? Okay, why do we have to pay that interest, right? So that's why I'm saying this debt has to stop from going up, so we don't have to keep issuing new paper, because that's what we're going to do. And the U.S. government needs lower interest rates the most, period, out of everyone. Why is that? Because in 2025, 9.2 trillion with a T, okay, of U.S. debt will either mature or need to be refinanced. Well, we're not going to pay it back. And if we do pay it back, and when they mature, all those notes and bonds that are going to mature have to get replaced, meaning refinance. How's that going to happen? We issue new bonds to replace those. Okay. Well, the ones that are maturing have an average interest cost of maybe 3.5%. The new ones we're put out are going to have an interest rate coupon on it, as we call it, of 4.5%, 5%. Just in there, our interest rate expenditures or interest cost on the debt is going up. So now we know what the bigger plan is. And how do I attach this to the macro picture? Well, this is how we do it. We put ourselves in a recession. We slow inflation down. We force the Fed, who's not listening to Trump, to cut rates extremely aggressively. And by the time all this refinancing needs to take place, we will refinance them at a much lower cost, much lower coupons on interest rates, because the bond market is too large for the Fed to manipulate. Okay. And when the Fed started lowering the rates by 100 basis points, the 20-year note actually, or the 10-year note, both have gone up by 100 basis points. The market's not buying any of this. The market's saying, you need to reduce the deficit. How do we reduce the deficit? How do we reduce inflation? By putting us in an intentional recession or a slowdown. And the U.S. government needs lower interest rates more than anybody, because this year, if they have to refinance at 5%, 4.5%, the interest cost is on all the paper that's out there. So please understand, when I say 37 trillion in debt, all of that is paper that's floating out there. And all of that, at some point, every day, billions and billions of bonds and notes and treasury bills are issued every single day. And all that has to get replaced, while all the maturing ones have an average interest rate of about 3%. Now we're jumped to 4.25%. Pretty soon we're going to jump to 5%. Why? All the new debt we're issuing to make it palatable to the new investors, in order for them to buy that paper, right? We need to make it palatable. We need to make it interesting for them. We need to give them a return. Well, the people who are going to buy it, who are they? All the same people that hold the notes now. They expire, they go invest the money there. They're going to require higher interest rates. Well, now our cost on that debt is going to go up automatically. So don't fool yourselves, people. This debt is a killer. It's an absolute killer. And I've been talking about this. I literally created this channel for this. This debt needs to get paid attention to. Luckily now, after 6 months, people are talking about it. A lot of people are paying attention to it. And Doge, hopefully, is going to stop the waste and fraud and inefficiencies of the government. So at least that debt starts going neutral, instead of in this trajectory. It just stops, like, flattening out a little bit. And so we can balance the budget. And so we don't have to print more money, so we can bring inflation down properly, not by raising interest rates and crippling the economy. So yeah, U.S. government needs to lower interest rates the most. And Couple of more topics, and then I'll put the link up. And if you guys want to come on, more than happy to join the live stream. Next thing I want to talk about, for a few minutes is in my mind, macro has completely changed. It has flipped. Okay. And again, this is not political. You may like Trump, you may hate Trump. It's not about that. It's what they're doing and what they want to do. Okay. I agree on the left side. The right side is what's happening though. So to sum it all up, what is the new administration talking? Right? Their talking points is all about, we want to lower inflation. The last couple of numbers were okay. How do we lower inflation? We slow the economy down. Only way. We slow consumer spending down. Well, if we slow consumer spending down, the economy automatically going to slow down because 80% of GDP is consumer spending. 2, lower oil prices. What did he say during the campaign? Right? Drill, baby, drill. Well, it's going to happen. They're going to lower oil prices, which is affecting all of us, because which one of us doesn't buy, gas, heating oil, or natural gas, all that stuff, right? That's going to lower inflation. Well, if those first two things happen, lower interest rates will follow. If inflation goes down, economy slows down, lower oil prices follow, lower interest rates will follow, right? And the fourth one is what Doge is trying to do, less deficit spending. Well, let's control the deficits. Because if you're taking in, like our US government takes in $4 trillion in revenue, the Treasury does. We spend $6 trillion every year, or $6.5 trillion. We can't live like that. If that was my household, I'd be broke, right? I don't have the power to print money. Okay, less deficit spending, sure. Reduce US trade deficit. This one is a touchy-feely go one, because the only way that happens is by these supposedly, these tariffs that every day there's a comment. Oh, 50%. Oh, no, I'm taking it back. Oh, 25% here, 50%. Like, if you listen to them, market's moving up and down, but every time, Trump says tariff, and then I can see the sell-off happening. And last one, less government inefficiency, so more government efficiency. All of these can be obtained and are a byproduct of economic weakness. Well, yeah, all of these will happen. All of this will happen if we go into recession automatically. So, and as we know on the right-hand screenshot, let's look at the first 4 years of Trump, what the S&P 500 has done. And let's look at the first month and a half, couple of months, right? All right. So comparison, Trump 1.0 versus Trump 2.0. So this picture is telling you, the graph is telling you that it's completely different than what was happening until COVID hit in his first term, Trump 1.0. So the green line is Trump 1.0. The red line, and that's the S&P 500, or the return on the market. And that's where we are. Okay. I'll answer all the questions when I'm finished. In the Trump's first term, S&P 500 was up 5%. Okay. All right. This is the first 100 days or so. Okay. It's currently down 8% since January 20th. Right. And there has been drawdowns during the first term, but nothing like it. I mean, we are selling off hard because market's taking a hold of what they're talking in Washington. Yes, we need lower inflation. Yes, we need lower oil prices. We need lower interest rates. We need less deficit spend. All of this can happen if the economy goes into a recession. Otherwise, it's not going to happen, because I don't think Doge is going to be able to find enough waste, fraud, and inefficiencies to reduce that 37 trillion in debt. Okay. And there's definitely a shift. But as I said in the first topic, on the first segment, short-term pain for long-term gain. That's the talk in Washington. And it's pretty clear. I mean, first 1.0 Trump, green line, 2.0 Trump, for so far so good. But if I'm still doing this in a couple of years or 3 years, and then let's see where we end up, right? So the important thing for me is to understand the macro. Important for me, thing for me is to figure out all of this that's happening and be cognizant of the facts, put the picture together and invest and trade accordingly. And that's what I'm going to do. And I'll keep the channel going, you know, as long as I can, because I have other obligations, as some of you know. To me, the important thing is keep cash. Always keep cash. When the market gets this volatile, when VIX is at 30, 25%, or 25, and I'm looking at the implied vol, all the options, index options, short-term, long-term, 30%, that's double the average. You need to be very careful with directional bets, right? If you do directional bets and you get the IV crush, implied volatility crush, and which some of the members learned the last couple, 3 days, is not a fun thing to be in. So let me answer some questions. Adele, good morning. Vic, good morning. Yeah, this is true. Well, they're not predicting, they're saying it. And I've been saying that when? Like, go check the videos out about a month and a half ago. Not that I'm right or wrong, but I see, I can just read the tea leaves pretty good. Devo Meister, greetings. Mojo, what's up? So we know where the Trump coin griff. Am I wrong to believe Trump at L is manipulating the market? No, I don't think market's too big to manipulate. Market's so big, Mojo. Yes, all of that is valid, but market is so big that is it okay? Manipulating, I wouldn't call it manipulating because we don't know. But what I call it is it affecting the market? Yes, without a question. And in turn, you may say, well, some insiders know what he's going to say, and then trading accordingly, possibly, potentially. Is it easy to prove? No. Has it happened during all presidencies? Have there been insiders? I mean, who are the biggest insiders? Right? People in Congress. They trade actively. You can follow Nancy Pelosi and make a whole bunch of money, right? So to me, it's not about Democrats, it's not about Republicans, it's about both sides. Both sides do this, both sides are guilty of it. And the important thing for me is me. I care about me. And I try to leave them accordingly. I don't worry about too much who's trading on inside info, who's making millions. Look at the Congress people. There was a guy last year, he beat me. He was 140%. I was up 120%. I thought I was doing well. He beat me. Number two is a Democrat. Number one is a Republican. They both beat. I mean, those are the insiders, right? They write the laws. So is it his cohorts? Is it his, before he says it, he tells other people they go by 0 DTEs? I mean, yeah, potentially, but pay too much attention to any of these things. Ni Nohan Le. How do you use quant data? I use quant data as a tool, not to trade. I'm frequently in their chat group in the Discord. Once in a while, William will put me on the stage and make a fool out of myself. But no, I do use it, but I don't use it to trade. They are too short term for me. I am not short term. I mean, I swing trade. Sometimes I do short term stuff, maybe day to 3 days or whatever, but still swing trade. I don't think they take too many positions overnight, and they are looking for more short term, 0 DTEs, and put credit spreads, call credit spreads, or they take very little directional stuff because directional moves happen over days and weeks. And I believe that if you do short term trading, every day you have to be right. That's additional pressure. Yes, if you do catch a trend and the market's going to move 10%, I may miss the bottom by 2%. I may miss the top by 2%, but I got the fat percent in the middle that I can do and I can take advantage of. So, what I do is that, though, they do have good pivot points. They do. Obviously, I like their data analysis. And combine their data analysis with my other assets like technical analysis, macro, and things like that. Yes, I do follow them, but I don't trade on them. Although William, I don't know how he's doing. Hopefully he's doing well. So let's go to the account. Full transparency here. I reduced exposure. So let's see. Can you guys see the screen? I'm going to take myself off. I'm going to make the screen bigger, but put a thumbs up if you can see the screen. Please. So I know I'm doing the right thing. Hopefully. Yes. Anybody? No? Well, I'm hoping that you guys can see the screen. Why don't you use Discord instead of Tele more organized? Yeah, it's probably maybe, but I may do that, but I'm not doing this to make money. I mean, a lot of people have Discord channels, subscriptions, and things like that. If I was doing that, I will take it seriously, and then probably do Discord or do other things. But a lot of those grifters, man, I don't know. I just don't pay any attention to them. I have my members. They're happy with what we're doing. If you want to become a member, go ahead, click the join. All right, so you guys can see the screen. Great. Okay, so where are we? What's happening? Well, this is what's happening. So I sold cash secured puts last week. I was a little early, but it's okay. And I saw cash secured puts meaning taking in premium. I saw cash secured puts on things that I want to own, because I'll show you guys the charts, and the positions have not changed. Although I had a Tesla position, which I liquidated. I had an MSTU position, which I liquidated because I am still green for the year. Okay. I want to stay green for the year before I think it's bottomed. And as I said, 3 P's: position, planning, and patience. I am okay selling cash secured puts, and if I do get assigned, I'm okay getting assigned these shares. So first piece is on the TQQQ, which is the ProShares Ultra Pro 2X ETF of the QQQ. I sold 3 puts expiring next Friday. Average cost 277. They're down. Yesterday hit 4.5. Today, but I'm willing to get assigned TQQQ at 60 minus my premium about 57.5, which I saw support to be. So I used my patience quite a bit because this thing was 92 about 3 weeks ago. So selling 60 puts made sense to me. So I took in some premium, and if I do get assigned at 60, I'm willing to own it at 57 or 56.5 or 57.5, and then I'll deal with it afterwards. Next one is Upstart. I sold cash secured puts 50 strike next Friday. Stock is 47.70. If it stays here, I'm going to get assigned this one. I don't mind buying it. The stock after the earnings last month actually hit 92. We're down to 50. Now, this is what's happening to stocks, by the way. Okay. This stock has no bad news. Obviously, it's pricing in bad news that's coming up, but there's no reason for this thing to sell off 50%. And I'd be happy to own Upstart at 50. My cost is about $3, so I'll own it at 47. So at this price, if it's at this price by next Friday, I'm going to get assigned 300 shares, and I will add shares to it. I'm short 6 March 40 Robinhood puts, and I shorted them at 228 average. So I don't mind owning Robinhood. It's 39.03. If it ends up here by next Friday, anything is possible by next Friday. It's a lifetime these days, 5 days. I will own Robinhood at 37.5. 600 shares of it, and then that's why I also cleaned up the account to make room, because it's getting close to expiration, and do get assigned. I don't want to go into margin, obviously. And then that last one I sold puts on is Affirm, another stock I like, which is down 45% from its recent all-time high. Not all-time high, 52-week high. I sold those at 363. They're down to 2 and change, 240. Stock is 49.61. If it ends up here, I will get assigned, but if it's above 50, obviously options are going to expire worthless. So there's a lot more meat left on the bone on those options. Give me 1 minute. I'll be right back, and then I'll go to the charts and then put the live link up, and you guys can come on and check it out. Okay. Hopefully everybody's still here. All right, so that's the positions. Account is about 90% cash at the moment, and I will add to these puts as I see fit. That's what I want to do. I mean, this market is a way that, look, directional bets are really, really difficult. The reason for that is implied volatility is extremely high. If you do take a directional bet and you run into an IV crush, then you're screwed. Even if the market moves in the direction you want it to move, you're not going to make any money. Well, you may make money, but not as much as you think you will. So you need much bigger moves. And I'm willing to own all these shares. Okay, I'm willing to own TQQQ. I'll add to it. At this. So if this was like next Friday, we have a massive OPEX coming up, quarterly OPEX option expiration. So I have so much more meat on the bone left on all these options. The TQQQs are like 210. I sold them at 277. I have like a few hundred more there. So I have a 6-digit account, by the way. So I'm being very cautious by selling these puts again. So I have plenty of room to add more to it, but I need to see a bottoming action a little bit. And at the moment, yeah, we're up today, but who knows what happens Monday through Friday next week. Anything is possible. But these are stocks that I'm willing to own at those prices, and then I will add more cash secure puts next week. Going forward, I'm going to do weekly cash secure puts. Look, collecting 3%, 2%, 4%, whatever it is, because of high IV, you should sell options as opposed to buy options at the moment, and have enough powder to buy to get when you do get assigned. If you get assigned, have enough dry powder not to go into margin, because that will kill you. So I do have plenty of dry powder. Yes, I did leave some money on table on MSTU, but I watch my equity. I trade my equity. So I'm still green for the year, double digits. I don't know how many people are green for the year, but I give myself a pat on the back, although I missed the short side, which I should have shorted. But on the next leg, I will go short and protect my positions or hedge the account if I do get assigned these shares. So at the moment, if this was next Friday, I will definitely get assigned Upstart at 50 minus the premium, Robinhood 40 minus the premium, and Affirm 50 minus the premium. Although we're on the border with Hood, and I mean, anything is possible. Okay, they could all be above the strike price and options expire worthless, and that's why, just gotta wait 5 more days. 5 bottles of beer on the wall. Anyway, but I'm willing to own all of them. So let's go through charts. Yeah, market's hanging in there for a Friday, which is interesting to me. But let's go through some charts. All right, so long-term, short-term. Let's go to SPY. If you guys have any questions on charts or whatever not, or other things, please let me know. All right, so this is a 3-year picture of SPY. This 3-year 1-day chart, 1 day meaning like daily. This is the drawdown we had. We had a drawdown from 614 all the way down to 550 range. 551. It's pretty decent, healthy drawdown. But during that drawdown, we broke a whole bunch of stuff. We really broke a lot, right? And this is what happened in 2021, 2022, the 5 leg down. Look at those uptrends, right? This massive bear market rallies. So what I think is going to happen here, technically, if you're a technician, we most likely will get a snapback to the 200 EMA first, which will be resistance, then to the double top breakdown point of about 575 on SPY. We're at 561, so we may have another 3 to 4% upside. Best case scenario for the bulls would be a snapback to the channel that we broke under. Right, this channel has been in existence since November of 2023. So we're not joking here. That channel broke. So technically, market is weak. Technically, there is support. Where is support? Well, this is the intermediate term uptrend and the long-term uptrend. That goes back, all the way to the pandemic days. and before. So there is a lot of room on the downside, but it will not be a straight shot down. If this is the V bottom, then we should just aggressively rally, go make new highs. I doubt that will happen. I think we will rally, we will pull back, retest, if not make a lower low. Good support exists right about here, which is about 505 to 508 on SPY. And that can happen, and by the time that happens, this uptrend will be at that level as well. So I think that's where we're going to end up going. Same thing with the triple Qs, 3-year chart. Again, the channel broke, uptrend broke, under the 200 EMA, under 50, under 20. We all know that. This uptrend goes to 2022, 3 point of contact, perfect 3 points of contact. And this is the first time we're going under 200 EMA. When market goes under 200 EMA, it does spend quite a bit of time. And it is kind of rolling over. So there is definitely a trend reversal here, without a question. So short-term downtrend. Long-term, we're still in an uptrend. Very long-term. Intermediate, we're kind of breaking down now. So what should happen to triple Qs, which all the Max 7s rest? Snap back to 490, 491 maybe, to the 200 EMA, but then double top broke at 500. So we may get a rally to 500. As I said, in bear markets, the rallies are face rippers. You can make some money on the way up if you're really disciplined. I don't see anything positive here, really. So I'm looking at 3-year charts, but if you say, Serge, why are you looking at 3-year charts? Okay, we can look at one-year charts. Here's 1 year of triple Q. Same picture. You're not going to be anything different. I think we may get a rally to 500, and then I will be selling. Pretty much going liquid, and then most likely I'll be going short. I will definitely catch the next leg down. First leg I didn't catch, so triple Q's sold off from 540.41 down to 466. That's 80 points. That's about 14-15%. So let's go through some what people follow. Apple under 200 EMA. 250, about 14 days ago, 250 high, we're 211, 210, can't get out of its own way. We're going down. So I think next level of support on Apple is probably about 200, well, 95 to 200, and then good support about 165. You're going to say, Serge, can those happen? Of course it can happen. But not without a rally. You'll probably bounce back, snap back to 225 now, to the 200 EMA, and then roll back down. All the Microsoft, it's been underperforming. I mean, it's pretty clear what's happening here. I think the same thing is going to happen to Apple. We went under 200 EMA, bounced exactly, kissed it on the way up, and now we're a clear downtrend on Microsoft. I can put the long-term charts, but if you're trading options, it's not. Look at this drawdown. This happened 470 down to 385, 390. That happened during the Japanese yen carry trade debacle. Well, this downtrend is equaling that, but the reasons for it is a little different. And we're even below that level of the Japanese yen carry trade debacle. And we're kind of snapping back to it now. I will be a seller of every rally on Microsoft until proven otherwise. Google, same thing, under 200 EMA. When all the generals under, and I talked about this last couple of months. I said, I can see the generals are being shot. The soldiers are dead already. When the generals are leading the charge, you got to be really careful. And hopefully some of you listen. Google, decent support at 150, 166 in middle of no man's land, under 200 EMA. Nothing bullish about it. The best looking one is Meta. That's the only one above is 200 EMA, but had a massive drawdown already, right? 750 down to about 570. That's the only one holding above it. Amazon under 200 EMA, just broke under it. I mean, yes, there will be a rally here. I mean, it looks like it, right? They're just kind of trying to stabilize here a little bit. And, that will coincide, like, hopefully, if you get an Amazon rally to 210, 214, 215, I will be a seller or a shorter, because that will coincide with triple Q at 500. What else? Oh, everybody's love Tesla. What a disaster. Look at that chart. I mean, you can love Elon, you can love the car, you can love whatever you want. you know, scoreboard. Price don't lie. That thing hit, I think it's 215, high of 488. Okay. I mean, we're not kidding here. We're talking 50% here. Market's down 14%, Tesla down 50%, over 50%. Think about it. Okay. So don't mess with markets. Price rules. Extremely oversold. A rally due, definitely. Where to? 300, maybe, somewhere in that range. So there is 50-point rally, hopefully, coming up here. And this will coincide with the bounce back. So 50-point rally is 20%. We're not kidding here. Okay. This is TSLL. If you want to trade Tesla, might as well trade TSLL. It's 2x ETF of Tesla. Yeah, that'll bounce 20. So if Tesla bounces 20%, this will bounce 40%. So this may get up to 13, 14. So there's plenty of room. I mean, on the bounce here. So bounces are strong on all these stocks. NVIDIA, another horseman. But that Snapseed, that just changed its colors over the last 3 days. This one sold off first, and it's snapping back to the 200 EMA first. It's been outperforming since it 105 about 4 days ago. Yeah. You know, I mean, we're bouncing back, and I'll be a seller of this about 120, 125. If I owned it, if I don't own it, would I go short? No, there are weaker ones than this. I'll be careful doing that. Triple Q. Oh, I did show the Triple Q. Never mind. Yeah, Triple Q will bounce to hopefully 500, and then we'll go short. That's it. So the stocks so TQQQ is I'm short the puts, 60 puts. You're going to say, why did you do that? Well, I want to be a buyer right about here into support right here, okay, which was 56.75. I sold the puts at $3 almost, so that's 57. So we're into support. If I own it down here, I don't mind owning it down here, and on the bounce, I'll clean this up, high 60s, 70s, hopefully, and into resistance. So I don't mind. I don't mind owning this. The next one I don't mind owning is Affirm. I may get a sign, I may not get a sign. Look at this thing. 82 high, 82 and a half high. We hit 44 yesterday. I don't mind owning it about 47. That's where I'm going to own it because I sold the 50 cash secured puts for next Friday. Next one is Upstart. 96 high 3 weeks ago. We hit 45 yesterday. I don't mind owning this again, about 47, 46 and a half, 47. It'll bounce if it bounces, and if it doesn't bounce, I'll liquidate it or sell short-term calls on it. But that's that last one, and last one is Robinhood. So patience does pay. I was so patient with this, right? I could have done it at 60, 50, 40, not waited and put the cash secured puts out because I truly want to own Robinhood, like about 36, 38 range. Okay, that's one way. If they expire worthless, I'll put them out again, put the puts out again. This was 67. It hit 34 yesterday, people. Okay, so market's down 14%. These are down 40, 50%. So let's not mess around with any of that. Let me look at my watch list. If you have questions, please put them up. Okay. Let's see what we got. All right. Firm I looked at. AMD still down. I mean, it's actually didn't tank when the market tanked. I mean, it had tanked before. Chinese names extremely strong, still strong. Alibaba just consolidating after a massive move up. Next leg up higher. I've been talking about these for 3 months now. If you've been following me, you made a shit ton of money. Billy. Actually, it's kind of consolidating nicely. I may just give it another shot here. We traded it when it broke out of this wedge, right about 18 to 20. And then we got up to about 24 and a half, pulling back. Volume kind of drying out. Next leg up, 30. Bitcoin doing well today, but this is BITX, the 2x ETF. right? It got trashed. All these ETFs, 2x, 3x ETF, you got to be really, really careful. This is MicroStrategy. MicroStrategy 291, hit 220, went to 320, back to 220. This is all happening in like 8 days. And we're back to 290. And this is MSTU. This is the 2x ETF of MicroStrategy. Complete Bitcoin surrogate. I mean, decent looking chart actually. But if you do believe in Bitcoin, you know, trade these. Don't trade Bitcoin. I have actually, I'm hoping I get assigned. This is Kava, one of my big winners in 2023 to 2024, 5.5x almost. 33 to 150, then it went to 170. It's 77 today. I have next week expiration that I put out last week, $80 puts, cash secured puts. I would love to own Kava about 74, 75. No question about it. So that's one in my long-term portfolio. What else? I mean, everything has gotten trashed so badly. There's so much damage on these stocks. And a lot of people were like, oh, hims and hers. Yeah, look at what they did to that one. There we go. Look at that. 73 high, hit 32 yesterday. You know, yeah, sell cash secured puts. I love him. Yeah, okay, well, what about it? Now he needs to base now. He needs to base and relax and, you know, I mean, some stocks were just absolutely just shot to pieces. This is AppLovin, although it did halt. It's downside, so whoever says technicals don't work, they can go suck it. That thing was 525, sold off to 240. Now bouncing, it's a sale. Sell on a bounce. I mean, that's all I know until things change. I like Bloom Energy a lot. I think in all the sell-off, what did Bloom Energy do? Nothing, just going sideways, biding its time. Next leg up, much higher on Bloom Energy. So I will definitely trade Bloom Energy. Chinese names, definitely strong. Strong meaning outperforming, right? You got to find outperforming names. Meaning when the market's going down, they don't go down. They do go down, but they go down like 1%. When the market's down 1%, instead of like the other ones, the market goes down, they die. So that's the whole idea. Find outperformers. Let's see. I'm looking at this list. The list is just trashed. Well, let's look at some of these. Look at these. I mean, this is a quantum stock, right? Okay. It's tough. When the market's like this, it's tough. You got to hold your powder dry and take your picks. Let's see. Marathon. Actually, Marathon was, yeah, that's what I mean. Look at that. You know, Bitcoin at 85,000. This thing was $30 when Bitcoin was at 105,000. Bitcoin 85,000. This thing is 12. Yeah, gotta be careful with these. Okay, one I actually am kind of turning bullish on, but it's Micron, just in a massive trading range between 85 and 108, 110. What did this one do when the market went down? 14%. Nothing. In fact, it's responding right away. So this is what you guys need to pay attention to. You guys need to pay attention to outperformance. Same thing with Nike, right? It's coming back. I mean, I wouldn't mind selling cash secured puts on Nike now. It looks like it's bottomed for short term anyway. NVIDIA we talked about. Another one that I was short, OKLO. 59 high, hit 22 yesterday. See what I mean? And now it's kind of bouncing. Okay, cool. Not interested. Palantir, another one. We actually did short and make decent money with this. If it seems like it's just trying to find its footing, I wouldn't be a buyer. 125 high, 75 low yesterday. I mean, you know, be careful with these people. Trees don't grow to the sky. All the quantum names are bouncing today, I can tell. Yep. Qubit. There's one. Look at that. Right? 27 high. 4 days ago. Yeah, they're bouncing. You know, people go, oh, you make money. Rocket Lab, another one. Lunar, holy crap. I don't even want to talk about that. There you go. But actually, it just found supported like right at the 50 EMA, about 16.5, 17. Okay, so that's not that bad. What I noticed is lithium stocks have been doing well over the last couple of days. Let me look at PLL. Nothing there. Sigma Lithium. Yeah, basing. When it breaks out, I'll be there. SoFi found support at 200 EMA. We broke it and it's kind of struggling about here. Seller on under rally. Seller at 13.5. I'm a seller of all of these things. Yeah, you guys want to see bloodbath? Yeah. Look at this thing. This is Tempest AI. 91 high. Market sells off. In 14 days, this thing comes down to 43. The one I'm really watching, and I'm going to definitely trade this. It may be a boring trade, but I'm going to do it. So if you do believe what Trump and administration is trying to do to lower interest rates, TLT should be there. I want TLT at like 100, 105. How do you trade that? TLT is the inverse 20-year Treasury bond ETF. So when TLT goes up, that means interest rates are going down. When TLT goes down in price, that means interest rates are going up. So interest rates have come down a touch since Trump took over, a little bit. So this bottom, let's say at 86, 85. We bounced to 93. We're down to 90. I definitely want to be involved in a TLT trade because if we do go in a recession, TLT will rally hard. That's what happens. Interest rates go down. And yeah, that's about it. I mean, everything is just taken out to the woodshed, and you just got to be patient. Now everything is broken down. You just got to let the correction play itself out. I don't think it's going to be a V bottom. I think it's going to take some time to heal all these wounds. And let's see. All right, I'll answer some questions. I'm going to put the link up. I want to join. Yeah, I mean, you know, no, 1 to 2K, you're gonna get blown out. I wouldn't do it. I wouldn't do it. In this volatility, especially now, the only thing you can do is trade some stocks. Trade the underlying. You can do that. You know, 10 shares, 50 shares, whatever. Just sold all of my. Yeah, now you should have. You don't listen to me. I'm looking at you now. I told you to sell the calls. Anyway, we'll talk about it. Mr. Robinson. I love the show too. You want to come on? I'm going to put the link up. Thank you for the super chat, sir. Why don't you become a member? We can make some money together. Just click join. You get me for a Big Mac, and you get a free shirt like this out of it, Mr. Robinson. And you learn quite a bit. Yeah. But if you guys want to do it, do it. So I'm going to put the link up. And let's see if you want to join. Some of you may want to join. Show your face. We can discuss whatever you guys want to discuss except politics. We don't do that here. So here's the link. There's the link. If you guys want to grab it, as long as your internet connection is good, please come on. I'll be happy to chat with you guys. Mr. Robinson, why don't you show up? We can talk about anything you want, except rideshare. This is not a rideshare channel. Yes, Mojotronics, you were in. So it's okay to hold it on the downside all the way to 4 and feel the pain. This is what the market electronics. It's going to make you wrong. It's going to try to make you wrong. Okay? Told you. That was the whole idea. I don't want to talk about it. You upset me, Mujit. I'm kidding. Andy. Let's add Andy to the page. Hello,
Hey,
Andy.
Sergio.
How are you?
Good, good. So, yeah, I've been following you for a while, and I do like day trade, but I'm interested in what you're doing because it's more like peaceful.
Yeah.
But I was
Well,
just
where are
wondering.
you from? Introduce yourself to us, and
Oh, yeah, I'm
from
in
there. Okay.
Dallas, Texas. Yeah, and I've been in the market for a while, just learning. Haven't really make any money yet because it's kind of super hard, but I love it though. And I'm
Do you have what do you do for a living, if I may ask?
or just I work at a manufacturing company,
Okay.
like manufacturing windows and stuff. Yeah.
Okay. So you do have a
But I
regular job, but then you just want to make extra money doing the market, right?
Yes, yes.
Okay. All right.
And I was just wondering about the don't you do some buy side also, or you just mostly sell side?
Both. Both. I
Oh,
hold on a second. I will talk to you. Give me 1 minute. Okay, I'm just answering a comment. Yeah, I do both. Directionals are tough when the market's like this because implied volatility is extremely high. So this is what I'm going to suggest you do. Okay. How long you been trading or learning, trying to trade or learning?
for about 2 years.
2 years. Okay.
Yeah.
So I'm assuming you paid your tuition. Um,
Yeah. Yeah, I understand the basic of option, I understand like all the
okay.
Greeks and all of that.
Do you know
Um
the Greeks well to understand the
yes.
relationship? Okay. All right.
Yeah.
Cool.
Yeah.
Okay.
Yeah.
So yeah, you ask. I do both. I take directionals. When the implied volatility is low, it's okay to take directionals. But when the implied volatility is high, like we are experiencing last 3 weeks, it's really difficult to do directionals. That's when I start selling premium, when implied volatility is high. When implied volatility is low, I do a lot of synthetics, like sell the puts and buy the calls, or sell the calls, buy the puts, if I want to short something or if I want to go long something. So I use the credit of the sale to pay for the purchase of the call. So I'm not putting money out of pocket, but you really have to be convinced, and you have to be in kind of an uptrend or a downtrend to do those kind of things. So I do both. If you ask me that, that's the answer to your question.
And let's say like do you when I join, do you have like a course on what you're doing so that you we can learn, like learn from you rather than, or is it more like you giving out
No,
your thought
I
process?
don't do private coaching. I mean, I can do private. I don't have the time. I do so many other things, Andy. But what I do is that all our members have bought the books. I have recommended technical trading books and option
Yeah.
trading books to them. Okay, and our chat is pretty live. The Telegram chat group. And when somebody asks me a question there, I will answer that question. So I'm on it. Like I'm not like delaying it or whatever. And then I put my trades there. So when I put my trade there, I explain to them like why I'm doing what I'm doing. So it's not like
Yeah, then we
coaching,
can learn
but
from that. Yeah.
you if you read those books and understand the Greeks, you should have no problem following what
Okay.
I'm saying, right?
Okay.
Because I told them all, I go, listen, if you don't know the Greeks, don't touch options. If you don't understand implied volatility, don't touch options. If you don't know the basics, because a lot of people are directional these days, right? So they buy calls, they buy puts, and then it doesn't work, and they because there's reasons for that it doesn't work, right? I enjoy selling premium a lot more than buying premium, but then there is time to do that, to do both. So yeah, I mean, you'll learn, it's if you know the basics, you will improve your quality of your trades. I put everything out there, right? I'm fully transparent, wins, losses, whatever. I'm not the usual YouTuber. I have another channel that I work with, but it's full transparency. I mean, if anybody tells you, "Oh, I'm winning 80% of the time," I'm like, bullshit. Nobody's doing that. So if you do, I don't know how long you've been a subscriber or follower, but last year I also put my yearly and quarterly. I have a 6-figure account, trading account, so it's a decent size account that obviously I don't want to blow, right? But what I would recommend to you as well, you're much younger, obviously, you should separate your trading account from your investing account, right? You should have an long-term investing account. Like when the market sells off like this, right? And you have like names, like if you want to buy Robinhood for the next 3 years, I think Robinhood at this price is an amazing price, right? So start accumulating shares in your investment account. Yes, you should play with some play money that you can afford to blow, and hopefully you won't blow. But last 2 years, I'm assuming you blew some cash trying to learn, pay Wall Street its tuition, right? How did the last 2 years go?
Yeah, definitely. I did pay my dues for sure. But I heard your thesis about China
Yeah,
stock, right?
yeah.
And I actually had the opposite reason, but I was wondering what's your opinion on, because Trump is planning to, you know how China company they get that waiver when they list on they get that, what's that called, audit waiver when they list their stock on here, and Trump is thinking about taking that away.
Oh, the
So what's
ADRs?
your
Yeah. Nah,
yeah
I'm not going to worry about that. I think Trump is more talk than anything else. Okay. I think all this tariff talk is just um like saber rattling, like, oh, I'm going to make you nervous or whatever. It doesn't work, right? I think that'll all settle down in about 3 months or so. The reason I'm extremely bullish on China is because where we're going to be in the US 6 months from now. Chinese economy is in the toilet, right? Their real estate is in the toilet, and the government is stimulating like we were, like how we stimulated in this country with cash, right? Printing money during COVID. That's exactly what China is doing now. If you look at a 10-year Chinese their treasury note, it's less than 1%. They're cutting interest rates, they're pumping money into the economy, and look what has happened to the stocks, right? All the ADRs that we trade here, Baba, Billy, Baidu, JD, and PDD, all these Chinese names. I'm super bullish on China, especially on Baba, actually. And so yeah, I don't pay attention to much news. So the way I look at things is I create a thesis, right? I'm committed to that thesis until things change, and that's why I can't day trade. You can't day trade a thesis. The thesis, you create the thesis, you give it time. If it's working, you go with it, as long as it's going with it. If you owned any of the Chinese names that I discussed here, you wouldn't have even felt the stock market correction last 3 weeks. Nothing happened to those. In fact, they went higher, right? So that's the whole idea of create a thesis, structure trades that fit the thesis, and be patient with it. Let it happen. It's like planting a field of corn, right? I plant the seeds, corn starts growing. Okay, that means everything is going well. When it gets to like 3 feet, I'll trim some, right? That's why I scale in and I scale out, as opposed to try to be right 6 times a day trading. I can't do it. I've done it all. It's not for me, right? I'm more of like slow and steady, but then at the end of the year, I'm up 120%. How much are you up, right? So day trading is like, you can create so many biases. Again, I'm not saying it's not valid. I'm not saying people don't make money day trading, but it's a lot more difficult. So mine is a little bit more longer term swing trading. position trading. I create the thesis. I structure the trades around the thesis to the best of my ability, either with shares or options, and then I let it go. I let it go, meaning I let it grow. So, like when I showed you my positions today, that's what I'm trying to actually acquire all those shares. I want to buy those stocks at those prices, which I think is going to be fine. So, but yeah, no, I think my thesis has been correct so far with China. They're stimulating. They want to grow the local economy. They want to get it out of the recession that they're in. And yes, doesn't help Trump talking about tariffs every other 15 minutes. But then I think it's just more talk than anything else. So I think we'll be fine.
With your sell side, I guess your downside is more manageable because if you get to assign the stock, and then you can set your stop loss, right, at
Yep.
whatever. But if you're on the buy side, how do you manage the stop loss? Do you definitely set it at like 50%,
As at the
or
buy side of the stock or buy side of the option or what?
option? Buy side of the
Option.
option. Yeah.
I will not buy anything that the stop loss on options is difficult, obviously, but
Yeah.
I'm not a huge believer on stop losses. You just got to mentally be strong enough to take a loss. Okay. During this drawdown, I shorted puts. I took losses on TSLL. I was short the 14 puts. It gave me a chance to break even. I closed them up, rolled them down to 11. Damn thing went down to 7, went back up to 9.5, 10, closed it out, took a little hit. You need to learn how to take losses. So I do manage quite well, the risk management, right? But on the directional, I'm trying to buy things without putting much out of my pocket to start with, right?
Yeah.
Meaning, so if I think a stock is going to go up 10%, well, I will sell at the money puts and buy out of the money calls. So I'm actually doing it with a credit. And if I do get assigned, I don't mind getting assigned at that price, right? So I'm doing my directionals mostly on synthetics, selling the put, buying the call. I'm financing the purchase of the call with the put that I'm selling, right? I just pay attention after that to the put side. I don't pay attention to the call side. And the put side gets too deep in the money, I got to get out. I got to clean up the position, right? That's how I do it, because on most directionals, rarely I take a directional. If I do it, it'll be on the indexes, right? Index calls or puts, mostly hedging. But yeah, I pay attention to, since I'm financing the purchase of the calls with the money I'm taking in on the puts, I'm like, I didn't put any money out of pocket, so I'm okay with it.
Then, as you were talking about, like having a thesis, right? So once you have a thesis, let's say I have a thesis on uranium, fundamentally,
Okay.
like long term is,
Okay.
I think it's really has a supply demand deficit, but uranium is just down in the dirt right now. So if you want to attack that as
Yeah.
the long term, bull,
Okay.
how would you go about
Well,
that? Would you?
find yourself some stocks, obviously first, right? Do some research about. You can Google it literally, or ask ChatGPT. Send me, ask ChatGPT or
Well, I'm
Grok
familiar.
or
Yeah.
whatever you're doing, whoever you're working with. Say, give me 10 publicly listed uranium stocks, right? Look at their charts, look what they have been, look at what the action is, look at some of the fundamentals. And this is all public, easy stuff to do. And I tell all my members to do this. Yahoo Finance, I think, is amazing, right? They have all the updated data. They have the share count, size of the company, market cap, outstanding shares, float, debt to equity, earnings, EBITDA, all that stuff. It's amazing. So find yourself 3-4 names. Don't go into 10. Like out of the 10 that maybe ChatGPT will give you, find like 3. And find the best companies. Find a large cap, small cap, and mid cap to see if they're optionable. If they're optionable, great. If they're not optionable, maybe find some that are optionable. And then once you create the thesis, and if your thesis is long term, start accumulating shares. How do you do that? Start selling cash secured puts. If you get assigned, it has to be stuff When you sell a cash secured put, you must be willing to get assigned, because rolling in a market like we have, it will make you poor. Okay. And at some point you won't be able to roll. Like all the options that I sold on Upstart and Affirm and Robinhood, right? Where would you be if you sold cash secured puts on Robinhood at 60? Stock is 38. You know what I'm saying? So,
Yeah.
but going back to your question, find stocks, if you have a thesis, that support your thesis, and start structuring trades. It could be cash, it should be share purchases, it could be leaps in options if they have
Yeah.
options.
Okay.
You
Yeah.
can,
About
so
leaps, I was thinking.
there's something called poor man's PMCC, poor man's cover call, right? You buy the leaps, sell the short-term calls against it, and think there's many ways to skin a cat. You just gotta, if you believe in a thesis, there's easily you can structure trades around it. It's not that difficult.
Yeah, I was thinking about what's your opinion on leaps? Are they like you have to pick it? You know, like do you have to have the delta in certain range for leaps?
Yeah,
And
obviously, right? I mean, you don't want to go. A lot of people like buy time by going out of money leaps. I'm not a huge fan of that. I rather pay high delta on leaps, like 80, 70, 80.
okay.
And then I get 0.4 point, and I'm paying very little extrinsic value for the options for the leaps that I'm buying. And then you can sell short-term calls against it and lower your, lower your cost on your leaps. Like
Okay.
way out, 10 delta calls, like way out, like month out, 10 delta calls. Yeah, you take, let's say you buy a leap for $5, $8, whatever, right? And let's say it's a $10 stock and you bought a year and a half leap for $6 or whatever. Okay. Sell a $20 call, collect 20 cents. Just
Okay.
lowered it, just lower it, like, low delta, way out of the money calls. Poor man's cover call.
Okay. Well, thank you, Sergio. You're like I've learned a lot from just watching you,
Cool.
and I appreciate you like putting your effort in and teaching us. It's like it was very valuable. So thank you.
I appreciate it. Please share the channel.
Mhm.
Help me grow. I mean, look, I don't know if you know me from YouTube, other places, but I'm doing this out of love. I really love this subject, right? And I know it, and I've seen every single movie that's out there about this. Not the actual movie. I'm talking markets, bear markets, bull markets. I don't think anybody has, all the traders or investors, new ones, have started during the pandemic. They have no experience in about how these things work, and they got a little taste of it last 3 weeks. And all I can tell you is keep your powder dry. Don't blow accounts, man. It's tough. It's tough to bring him back.
Did you say you were involved in another channel? Like what other
Yeah,
channel?
I'm involved in another channel, but that's nothing to do with finance. It's completely something else. So,
Oh, oh, okay. All right, thank you.
all
I
right.
think that's covers all. And yeah, I'm gonna keep watching you, and I appreciate all the effort that you put in and teaching us.
Well,
Thank
thank
you.
you. I appreciate it. Thanks for coming on. All right. That was cool. Sergio, if I sign up for your monthly program, there's, yeah, I received the money. Less YouTube commission. That's about it. This is my channel. This is not the other channel, Scott. Yeah, Mojotronics. Okay, John's just looking at the next Friday's. Damn, you should have listened to me. Shocking. Hopefully, one day, I don't know, I'm going to come up north and strangle you. What are you doing, bro? Anyway, all right. So I hope you had a good time, all of you. Interesting show today. We do what we do. A lot of people do other things. I'm like, hey, man, I know what I can do. My account's green. How many of your accounts? How many of your accounts are green? Right? It's tough. When the market's like this, it's tough to be green. But I'm gonna keep my powder dry, and then when I feel like we're put the gas back on. There's time to be aggressive, and there's time to be not aggressive. This is not the time to be aggressive. So with that said, here we go. Have a good day. Have a good weekend. I'll see you guys on Monday. Trading with Sergio. Let's see what happens. Rally's holding together. You know, rally's holding together. I don't like Friday rallies. No problem. Okay, so if you're going to email me. If you're going to join the thing, email me, Sergio@sergioavedian.com. I will send you one of these beautiful shirts right here. Free. So send me your t-shirt size and send me your mailing address, Sergio@sergioavedian.com. Hopefully you'll join more than 3 months so I get my money out of it. I don't know if you trade or not, Scott. This may not be your thing. Do you know anything about trading or investing? Well, you should. You know what I mean? Look to the future. But anyway, see you guys Monday. No, thank you on the shirt. What do you mean? It's free. How can you say something free? It's no. Anyway, email me, Sergio@sergioavedian.com, and then we'll take care of it. And then I'll send you the Telegram chat group link so you can get into the degenerate group. Okay, so see you guys Monday. Trading with Sergio every Friday, power hour, 10 a.m. Pacific, 1 p.m. Eastern, and members only lives every Wednesday, 3 o'clock-ish, 3 p.m. Pacific, 6 p.m. Eastern. And see you all Monday.